Hey everybody, Jeff Landon here with Landmark Group. Today we have a special guest, Dino Rosetti. So excited to have him here. Today we're going to be talking about Cal HFA, which is a new government program, state of California, to help first-time home buyers get into homes. And Dino has been researching it, and he and I were just going back and forth and thought this would be great content for our newsletter and for all of our wonderful clients. So if you're interested in being able to buy your first-time home, this is something that you want to tune into. Or if you know somebody that wants to buy their home and has not been able to do it because of interest rates or other reasons with down payments, this is potentially a very interesting subject. So Dino, could you give us just a brief overview of Cal HFA?
Yeah, I sure will. I have an interesting perspective on this because, while I'm not an actual, say, loan officer or realtor, what I am is I'm a consultant to loan officers and realtors across the country, and they all have clients who are saying the same thing, like, man, we want to buy a house, but we're waiting for rates to come down, or we're waiting for maybe prices to come down because there seems to be this discrepancy, right? They see the value of owning a home, but they're kind of on the fence. So in California, we're really lucky to have this new program. It just started Monday, the 27th. So it's literally brand new. And what it does is it gives qualified first-time home buyers up to 20% as a down payment on a home. So if you're thinking like, man, I'm going to buy a home and I might have 3 or 5% down, so my payment's going to be here. That's why I want to wait, right? Because maybe that payment's too high. That same exact scenario,
Right.
now you have 20% to put down. And the cool thing about the 20%, Jeff, is there's no monthly payment on it. There's no monthly payment on this. So you're driving down the balance of your first mortgage. So it does a couple things. You're borrowing less, right?
Right.
And then because it's 20% down, you don't have to do the mortgage insurance, the monthly mortgage insurance, which is the mortgage insurance that protects the lender, by the way. It doesn't protect you in case you like hurt yourself on the job and can't work. It's the insurance that protects the lender. So you don't have to pay that because it's 20% down. So you're probably thinking like, okay, well, what's the catch? What's the catch? Well, there's definitely a catch. You've got to make under a certain annual income, and your loan officer can walk you through all that. There's obviously credit requirements. But the thing with the loan is it's called a shared appreciation loan. So when you sell the home or when you refinance the home, you pay it back, you pay the loan back, plus you pay back 20% of the appreciation. So Jeff and I were just talking about like a simple kind of math problem. So like say you buy a home for $500,000, and then a few years later, 5 years later, say that $500,000 home appraises for $700,000. Okay. So in that example, when you have $500,000, you'd get 20% down. So that is $100,000.
20% of 500, yeah, 100K.
Is 100. So that is the silent loan. So California loans you 100,000. So you're borrowing 400,000. Now, at one point you sell your home. Say it appraised for $700,000. So $700,000 minus the 500,000. Okay.
Yep.
Your house has gone up in value. It's gone up $200,000. That's the appreciation part. So the shared appreciation, it goes by your sales price versus what you sell it, your sales price when you bought it versus when you sell it. So your appreciation is $200,000, and you owe 20% of that, which is $40,000. So you'd pay back the $100,000 plus the $40,000, and then you are good to go. So you'd sell. So you basically you're in a home. Like there's a couple other nuances about it that your loan officer will tell you about, because here's a scenario. Yeah. Sometimes, Jeff, what it is you can get up to 20%, right? But what it is you can do 15% down. Say the client has 5% down over their own money. You can take the 15% from California plus your own 5%. So now you have 20% down. And then that extra 5% from the state of California, you can go towards closing costs.
Yeah, smart.
So
one of the things that Dino and I were
yes, you don't have to ask for a seller credit. Makes you more competitive out there.
Don't ask for a seller credit. It drives down your monthly cost substantially because you're coming in with 20% down. And what Dino and I were just talking about, like people are asking, well, what about the improvements and things that I do like that? And that's a great question that a lot of my clients are going to have because you do this product and then let's say you put like another 100K into it. So you went from 500 to 600K and then you sell for 700. Well, the state of California still gets that $40,000 plus the $100,000. So what you'd want to do is refinance before you did all of your improvements, pull out the state of California as that silent partner and just have like sole ownership of the home when you go to sell it. That way, when you do your improvements and stuff, you're not paying also the state of California is not benefiting from the expense of your improvements that you made to the home. So there's some tricks and nuances, but all in all, if you weren't able to buy a home and now you can, I think it's a great opportunity for people like to have that partner. And we see people do this all the time that aren't the state of California, right? You have a family member come on the loan, you have a friend or somebody that has good credit, and you guys both go buy the house. So this is just a big opportunity for everybody. Now the funds are limited. Dino, do you have those numbers of like how much
Yeah.
funds they have?
Interesting. The original proposal was they asked for $1 billion. They asked California for $1 billion. And what it was supposed to be was 500 million in 2023 and then 500 million in 2024. And literally at the 11th hour, when it all came together and passed, like a week before the program went live, they determined that they were going to grant, California issued $300 million in this year only without any talks for 2024. So they asked for $1 billion, they got 300 million. And what's interesting about that, Jeff, is again, it went live on Monday, the 27th. And if you look at like the number, do you know, by the way, how many sales happen in California on an average month?
Ooh, I don't know.
It's like, so January of 2023 was like almost 15,000 sales. And that's a very low month. So on average in California, there's about 20 to 22,000 sales per month. So let's just say we'll use 15,000. We'll be kind of conservative. And of those 15,000, I don't know what the stats are on first-time buyers, but maybe 20%. I mean, maybe it's probably more, but maybe 20, 25% are first-time buyers. So say in an average month in California, there's at least a few thousand first-time buyers that buy a house every month. And the average sales price in California is at least, I think it's a little over 500,000. So when you think of the math, if the average sales price is 500,000, that's $100,000 per family that does it. Into 300 million, that's 3,000 transactions. Okay.
Yeah.
So my thought is this thing might last 30, 60 days and then it's kind of done. And I don't, it's just an unconfirmed calculation of timing, but to me, there's like, if you've been on the fence, you definitely want to talk to Jeff because Jeff and his loan officer can run numbers and scenarios to show you the benefit of this, because you definitely can get in with a little bit, you can get in with less money and the payment's less. I just think, why not? Why wouldn't you at least look at it?
Yeah, if you haven't been able to get the down payment, it's like such a great option, I think. We've got 2 pre-qualifications that we're going through right now with clients, and they're excited about it. It's like people that have been really wanting to buy a home and it's just been a little bit out of their reach. And this brings down that monthly payment enough to make it a reality. So it's pretty exciting.
Yeah, that it is exciting. It is exciting. I think as long as people know kind of how the back end of it looks, like if it makes financial sense to do it, then it's just like, wow, what an opportunity. So.
Well, yeah, and thanks so much, Dino, for being on this call and allowing us to talk about it. And if you have any questions about this program, just reach out to my office, 805-904-0012, and we'll get you in contact with a buyer specialist so that you can dive in and really find the nuts and bolts of this program. And we've got great lenders that we work with. So yeah, give us a call, 805-904-0012. Hey, everybody, have a wonderful day. Enjoy the season. Take care.
Thank you.